Okay, so thank you everybody for jumping in this morning. If you're here live, some of you might end up catching this on replay. So thanks for jumping in because we really are trying to bring focus and sort of a reminder that you are the CEO of your business. So we're taking 30-minute chunks every Friday to make sure that you're taking time now as we really wrap up 2024, pretty much, where you are with transactions between now and December 31st. You probably know what's in your pipeline, right? There's not going to be a whole lot that's going to surprise you between now and December. So what we really want to do is turn our focus and get ready for 2025. So that's the goal of these 30-minute chunks. We're breaking it up into very manageable components, but just sort of getting you into that space where you're giving these concepts time and thought and intention going into the new year. Okay. So last week, I want to remind you, I'm going to share my screen. Last week, the first week, we wanted to go back and just sort of evaluate where you've been in 2024. What were the things that you think you did really well at? Identify those couple of things. Where were the things where you saw opportunity? Maybe just really high level, what your goals were, nothing very specific, nothing detailed, but just sort of high level, what you might want to look at for next year. Okay. But really, week one was about evaluating how you thought 2024 went and also identifying where your business came from. So many agents can't articulate that. Where am I getting my business? And when they see it on paper, then it really helps you identify and understand, am I diversified? Do I need to diversify? If I'm getting so many of my leads from referrals, then what do I have to do to sort of double down on that, right? And make that work even better for me. Now in week two, we're going to build off of that evaluation, and we're going to look at the dollars and cents. This is the painful one that not a whole lot of people enjoy. Hopefully you have the materials already, the workbook that we used in week one, and then also the spreadsheet that we're going to use today. If you didn't, I'm going to, at the end, put the QR code up again so that you can quickly request those materials, and I'll get them right out to you today. I'm just making sure everybody's muted. I'll get them out to you today, no problem. And then you can take that spreadsheet, you can take that workbook and get yourself caught up. Also, I'll share a link at the end of where we're posting our recordings. So if you actually sit down and find that quiet space where you want to work through these numbers, you need to remind yourself of something we went over, you can always go back and check the recording out. We just plopped this recording on our YouTube channel for Leader's Edge. Okay, so one of the materials that you got was the workbook. Other material that you got was spreadsheet, the numbers. You can either open this in Excel, or if you're a Gmail or a Google user, you can open this in Google Sheets too. When you open it, there are going to be two worksheets that you want to concentrate on. One's going to be called expenses. One's going to be called production goals. Now, I'm not taking credit for this spreadsheet. This is something that I picked up from the New Jersey broker's office. This is something that Jeff Kist likes to use. And I know he gives credit somewhere else. So it's been passed around a few times. I've also, every time I touch it, every time I pick it up around this time of year, I'll make a slight tweak to it, change something up a little bit. And you can also, even if you're in other businesses or you're doing other things, not just real estate, you can really adapt this in a lot of ways to those other business ventures. So feel free, you're going to download it. It's going to become yours. So manipulate it how you see best. But what I want to do today is we'll probably take about 15 minutes or so, maybe a little bit more, depending on whether anybody has questions, to go over how you will leverage this spreadsheet. Okay, so just to confirm, if somebody could just either shout out or stick in the chat, do you see a spreadsheet on your screen? Do I have the right screen up today?
Looks good.
Thank you, Kevin.
All right, I can see it.
Thank you, Lynette. Perfect. Good to know. Okay, so let's talk about how we're going to fill this out. 2 steps. First, you want to understand what your expenses are. And when we talk about expenses, we're going to look at those from both personal standpoint. What do you need to live, whether it be housing, rent, mortgage, food, utilities. And we're going to look at what it costs you to run your business. Okay, so that's going to be the first of the two worksheets, the one that's labeled expenses. Anywhere that you see yellow on these sheets, that's where you're going to enter information. Anywhere that you don't see yellow, the spreadsheet's going to do the heavy lifting for you and do the math. Okay, so let me just give you an example of how you might fill this worksheet out. I'm not going to go line by line on the personal expenses, but you're going to want to evaluate that. Everything from, like I said, mortgage or rent to how much it costs to fill your car with gas every month, childcare, if that's an expense, health insurance, if you make credit card payments, internet, all of the things that you can think of that you're paying on a monthly basis to live. In my example, I'm just going to, in the first line, go ahead and put a number. Let's say $4,000. And, I could fill in every line, but ultimately at the end, you'll see that my column is going to total for me. Remember, it's not a yellow field, so the math is automatic. There's my monthly total, $4,000. In this column of monthly expenses, you'll notice that I have a bunch of fields at the bottom for other, and I kind of put in red just to get you thinking. As you look ahead to 2025, is there a vacation that you want to fund? Is there a home improvement that you're going to need to address? And you want to be able to build up the cash to apply to that either vacation or improvement or whatever that fill in the blank is for you. So you want to factor that in. So maybe you wanted to save $200 a month towards that vacation. Maybe you have something planned. Maybe you have to make payments to the travel agent, whatever the case may be, but this is the place where you will enter that information. Okay. So let's just say I'm going to go back to my easy number. My total monthly expenses come up to $4,000. Your step 2 is going to be, let me evaluate what it costs me to be a real estate agent on an annual basis. So these are fees and charges that you experience before you even close your first transaction. Okay, that's really important because we all know that you can't be in this business for free. Even if you don't close deals, you're still going to have overhead in your real estate business, right? So you're going to want to fill in all those things. What are your realtor dues? Maybe I'm paying $500 a year. Maybe for my board dues, I'm paying $350 a year. License renewal in 2025. So make sure that you're factoring that in. E&O insurance. If you are an EXP agent, then you know that this number is going to cap out at $750. If you're with a different brokerage or on a different platform, then whatever you think that ceiling number might be, go ahead and leverage that ceiling number or that flat bill that you receive for that line item. Technology and education. Again, if you're an EXP agent, I'm going to put right in there, let the cell do the math. So I'm going to do $85 a month times 12 months. Okay. So there's my 1,020 a year for my technology and education due to my brokerage. And don't just stop there. Think about, am I committed to print marketing? Am I doing postcards? Do I do Google ads? Do I do Facebook advertising? Are there software programs that I leverage? Maybe I like to use Canva. Maybe I pay for Chat GPT. Maybe I belong to another MLS, not just one, but 2 or 3. Think of all of those costs before you even close a transaction that you're paying. If you aren't sure what those are, a great first start, go back to your credit cards, go back to your statements, and look at the last 6 to 12 months of data to be able to pull that information. You see a lot of commercials on TV now telling you that you can sign up for something to uncover those hidden subscriptions. Well, they're not hidden. They're just on the statement that none of us really likes to look at because it's sometimes too painful, right? That's okay. We're really in the mindset here as CEOs that knowledge is going to give you power as you build out your business plan. So get to the root of it and understand what it's costing you to be a real estate agent. The other thing that I'm asking you to think about, just like we said, is there a vacation or a home job, home chore on the horizon for 2025? Think about broadly, so we haven't really gotten into the planning details of our new year, but think broadly, is there an initiative that you know would cost money that you want to take on in 2025? Do you want to pursue coaching? Do you want to attend a convention? And it could be whether it's EXPCon or Inman, or maybe you want to go see a Tom Ferry event, or any event at all. Or maybe you just want to plan for those things and then allocate them to specific opportunities that come up later. This is a great place to sort of park that money. So maybe I want to factor in $1,000 or $1,500 to go to EXPCon next year. Okay, so that's step 2. So you've identified what it costs you monthly to live, and then you've taken a look at what your annual business expenses are. That's step 2. So just in my example, I have $4,000 a month to live, plus an additional $4,000 over the course of the year to manage my business. The last thing I want you to think about before we really get into how this translates to your production goals, think about what it costs you on a transactional basis, because we know that the costs don't stop at your MLS subscriptions and your board dues. We know that every time you take a new listing or you work with a new buyer, there are costs associated with working with that specific client. So let's say, for example, and I understand not every transaction, whether you're working with a seller, a buyer, a landlord, your costs might change. But you can argue in some of these cases that, let's say, for example, with a seller, you might spend $250 or $300 in photos, but you might spend that same money working with a buyer in gas, traveling to go look at properties several weekends in a row. So this is going to be, it's not going to be a perfect number, but for most people, having some number here is going to be better than where you were last year and the year before and the year before that. Okay, so just give your best estimate of what it would cost you per transaction to manage that client relationship and move that client, through the pipeline, through the journey to get to the settlement table. So let's say maybe you're doing $300 for a photo shoot. Maybe you're investing another $100 in boosts. From a brokerage standpoint, think about what your broker costs are every time you close a transaction. So in my case, if I know there's a broker review fee, transaction fee, maybe I invest in a client gift every time I have a closing. So now I've identified a number per transaction, $575. So just going through this exercise, gathering my data, I've now completed the entire first page, the entire first worksheet of this exercise. Okay. Now here's where we're really going to make these numbers mean something as we get ready to plan for 2025. We're going to go to the second sheet. These are called production goals. This is going to look really intimidating if you're not a spreadsheet person. Lucky for you, I think I was born with an extra gene, and it's called I love spreadsheets. So I have a lot of fun with this stuff, but don't let it intimidate you. Remember, you're only concentrating on the yellow fields, and you're letting the math that's already built into this spreadsheet do the rest of the work. So take a look at where we are. I've kind of broken this up into 3 different chunks, and every step is itemized. So we're going to next work through steps 4 through 7. Then we're going to take a look at 8 and 9, and then you'll see we break out the last 4 steps, 10 to 13. So let's take a look. Remember, steps 1 through 3 were, what does it cost me to live every month? What does it cost me to run my business annually? And what are my transaction-based expenses? So now the spreadsheet, as we move into a production mindset, is saying, okay, Deanna, you need $4,000 a month to cover your personal living expenses. And if we take that over the course of a year, 12 months, right? That puts you at $48,000 for the year. That's pretty straightforward, right? It also is factoring in what are your annual business expenses. Those were the things like board dues and MLS. So my annual cost of living automatically computed is just above $52,000 in this example. Okay. Next, in step 5, this is a really important question only you can answer. And it'll vary from one person to the next. But you have to think about that 52,000 number, and you have to determine for yourself, how much of that are you responsible for, or do you want to be responsible for in your household? So if you have partner, spouse that's contributing to the household income, then factor that in. If maybe you are in a multi-generational situation and other people are contributing in part to that overhead. So take a look at that number and decide, am I responsible for 100% of that number? Am I responsible for 50% of that number? Do I have other businesses, or maybe I have a full-time job that's covering 80% of my overhead, and real estate is covering 20%, but maybe I want that number, I want that balance to shift. Maybe I'm trying to get into real estate full time. And so I need to start climbing from, say, 80% full-time salary, 20% real estate, to maybe next year I need to make that 70-30 or 60-40, right? So again, this is very personal to you and only you can answer it. But the number that you're going to want to put here in step 5, right now in the formula, in the cell, I'm assuming that I would be responsible for 60% of that annual cost of living. Let's say it's 100%, then I'm just going to go ahead and put the 100%. Okay, so now I'm responsible for the full 52,000. You can always go back once you take a look at how we're going to take this number all the way through to the point of how many transactions you need to close. And even further than that, how many buyers you need to interact with and how many sellers you need to interact with to get to the point where you're closing deals to be able to cover this nut. So once you see how the numbers play out, you can always go back and revise and modify and sort of reevaluate what the math looks like. Okay. So let's say for now I'm considering myself responsible for 100%. So I'm at 52,000. Step 6, you want to think about the tax rate. What tax bracket are you in? I'm just going to go ahead for example's sake and put 30% into that field. So now it's, again, doing the math for me and calculating that in order to cover my tax obligation, I need to be at 70, just shy of 75,000 income before taxes. Okay, so are you understanding how we're sort of backing into this number? In step 7, there are a couple of things that only you, again, can identify, and you'll want to make sure that you understand what these numbers are. If you don't know what these numbers are, you should be either going back to your broker, your team leader, your independent contractor agreement, your team agreement, whatever the case may be. But you want to know what your company cap is, what your brokerage cap, and what your team split is. And also broadly figure out what your total transactions might be for 2025. So let me give you the example. Let's say that you are on a $4,000 cap. Maybe you're on a mega team with EXP and you enjoy a $4,000 cap. And maybe let's say your team split, you're on 75-25. So you're paying 25% into your team. It's just, again, an example. So I'll go ahead and put 25% in that field. And let's say just super high level that I want to close 12 deals in 2025. Again, just throwing out a number. Your number could be half that. It could be double or triple that. This is all about you and your business. There's no wrong answer here. So what this section, what step 7 is doing is it's going to acknowledge, all right, we're going to look at that take home target, make sure we're covering our tax obligation, but we also want to make sure we have room to cover our company cap and our team split, to really ensure at the end of the day that once all of those things come out off the top, that we are at the end of the road at 52,000 to cover our living expenses. Okay, so it's sort of moving us backwards to get to what that gross sort of top of the mountain number needs to be. So what this has defined is it's saying, all right, Deanna, if you want to close 12 transactions this year, remember from our first worksheet, we said we typically pay about $575 out of pocket for each client that we work with, buyer or seller, just on average. So it's taking that 12 transaction target, multiplying it by the 575, and that's where you're getting that 6,900 number. So it's doing that math for you. So here we are. We need to get to 110,000 gross commission income. That's your target for 2025 based on the numbers in the spreadsheet. Okay, you can sit and stop there and maybe let the panic or the stress or the worry set in. Or you can continue on and say, all right, let me understand based on how I operate my business, based on what my past success rate has been. Let me really get to the nuts and bolts of how many clients I have to work with and close to hit that 110 target. Okay. This is where knowledge is going to be so empowering to you. So based on that 110,000, let's move on to steps 8 and 9. Let's see if I can make this a little bit bigger so you can see it. In steps 8 and 9, we're going to look at on average. So obviously it's very important that we acknowledge that in the market that we're in, everything is negotiable. And I'm not for a second taking away from that. All I'm asking you to do is to consider on average, what is the commission rate that you are receiving with a buyer or seller? For this example, I might say 2.5%, recognizing that with some clients, that number might be 2.75, 3, even over 3%. But with other clients, it might be 2 or 2.25. Okay, so on average, I'm looking at a 2.5% commission rate. So that means that my target take home, my target gross commission income is 110. My target sales volume to get to that number would be 4.4 million. Okay. So now let's take that 4.4 million in step 9 and say, what is my average sales price in my market? If you are in a market where your average transaction is $500,000, terrific. You're going to put $500,000 in step 9 in that yellow cell. Maybe you are in a market where the average sale that you're seeing is 350 or 750 or even more. You have to be realistic with your market. And you also want to be practical and understand how the market is changing a little bit. If you were completing this spreadsheet a year ago and you're seeing prices continually aggressively grow, then you can sort of factor that in. We're seeing things start to slow down a little bit, maybe level off. So don't be so crazy aggressive with pricing. Be realistic. So let's just say I'm in a market where my average sales price is $350,000. Okay. So now it's telling me we know our target gross GCI is 110. Our target sales volume is about 4.4 million. And now the spreadsheet has told us, based on these averages and estimates that we've given, that we have to close 13 transactions around the $350,000 price range in order to hit those numbers. Okay, so it's giving us the information. The last set of steps that you're going to take are, now how do I translate that to actual buyers and sellers? Okay, so in steps 10 and 11, I want you to think about your business, not just this year, maybe last year and in years past. And think about what your typical split is between buyers and sellers. You can also, if you do a lot of rentals, you can factor in rental clients here. For the most part, I've left the math to concentrate on buyers and sellers. But if you need help specifically to address other things, maybe you're like way more into referrals or rentals than you are buyers and sellers, we can reevaluate how and tweak the spreadsheet specifically for you. So feel free to reach out to me if you want to do that. So we're going to take that target sales volume, and in steps 10 and 11, you're going to say, all right, generally in my business, what percentage of my clients are sellers and what percentage are buyers? That's not just necessarily how it's been in the past, but maybe you want to think about too, shifting that balance a little bit. Maybe you've been very heavily focused on buyers. You'd like to see that balance shift more to sellers or become more equal. So you're looking at past data, but you're also kind of thinking ahead to what you might want your plan for 2025 to look like also. So let's say for this example that my goal is to have 60% of my business come from sellers and 40% to come from buyers. The idea here is that the numbers that you're putting in 10 and 11 will get you to 100%. Okay. Then in steps 12 And 13, the last two steps, you're defining for yourself, all right, I know when I go out and meet with a potential seller, I might see success 80% of the time. So for every 10 listing appointments I go on, I'm confident that I can get 8 of those converted to actual listings. Okay. So I'm going to put percentage of success 80%. Maybe you don't enjoy that great a number of success, then be practical. Don't put unnecessary pressure on yourself. Maybe you're at 50%. Maybe in the past you've been at 50% and you want that number to go up. So again, you're starting to think ahead. Where do I need to invest in my business to build that success rate? Okay. But so let's say I want to be aggressive and I know that I can secure 8 out of every 10 listing appointments that I go on. And then let's say with buyers, let's say I feel really strongly with buyers that with every buyer that I meet, I can get 9 out of every 10 to agree to some form of agency, work them through the funnel and get them closed. Or maybe because I understand that the market has been so challenging for buyers for so long, maybe I want to be really conservative and say that for all the buyers that I work with, I'm only going to see half of them get to the closing finish line in 2025. So these are the questions that you're sort of asking yourself as you complete the numbers. So what we've essentially done working through this budgeting process, when you're done at the end, you're going to say, okay, I need to get in front of 9 sellers over the course of 2025 in order to convert that to 8 live listings that then close and sort of fund everything that we talked about, funding all of your business expenses, funding your brokerage overhead, funding your tax obligation, and then funding your personal finances, right? What you need to live. You have to get in front of 9 sellers to get 8 to close, and you have to get in front of 10 buyers in 2025 to get 5 to successfully close, to together between buyers and sellers, 8 sellers, 5 buyers, to cover your overhead, to cover your cost and meet your financial obligations for the year. Okay. So this is the math. One last thing when you're done the math, and this is not something that you're going to see in your workbook, but it's just sort of one final evaluation for your part of your homework this week when you're going through the numbers. Once you have those targets and once you see how many sellers you'd need to secure, how many buyers you'd need to secure for 2025, maybe you go back and edit it a couple of times. The last thing I want you to ask yourself is, if I compare these targets for next year to what I've done this year, are those numbers for next year more aggressive than what I've done this year? Are they pretty much even with what I've done this year? Or are they less aggressive than what I've done this year? Don't overthink it. Just come up with one of those categories, because then when we take a look at weeks 3 and 4 of this workshop, that's where we're really going to start to plan what are the high level goals for the year. And then let's break those down into chunks. And then let's take those chunks and break them down into daily and weekly activities that are going to help us make progress on those goals. So all you really want to understand right now is, how do those targets compare to what I've done this year? Because that's going to tell me how aggressive I need to be in those big goals, middle chunks and everyday details when we sit down and get into weeks 3 and 4. Okay.